just because the Fed rate goes down does not mean the mortgage rate is going to go down.
So this is a national number. I was talking to a client today, and they were saying that prices are supposed to go up 2 to 4%, but that's a national number. I don't know what the expectation is locally for prices.
Yeah.
If they're going to go up the same or more, because we're kind of insulated here,
Right.
protected by the university and all the development in our growing area. But on the other side of the coin, every time I go into the hot sheet, there's the first couple of pages are price reductions. So
I think that's still sellers, not. I mean, how do you feel? I mean, because I hear other realtors talking about that's still sellers not wanting to take your advice based on what the sales numbers show.
yeah, that plays into it a lot. They're still thinking it's kind of 2021 prices and not being really like realistic about it. Or if they want to do, we finally talked about a price reduction. They want to do a small one and not something that's meaningful. You have to do, around 5% or something to really get attention and make a difference in a buyer's eyes.
Yeah.
$500 is not going to be that much of a difference in a price reduction.
No.
So, I don't know. It's always difficult conversations to have, even if you have the expectations set out there. Nobody really wants to take a bunch less than they think they're going to get. That's just kind of a hard pill to swallow. But that's kind of the market now. It's not crashing. It's not that our values are going to go in half. I actually heard that on some kind of video or something this morning I was listening to about real estate. Some lady was predicting that prices are going to cut in half because they need to come down to what income is.
Okay, that's not how it works. You're like, that's not how it works.
That's not how it works at all. Anyway, so, nationally, we went to a thing yesterday Brian Buffini did, and Lawrence Yun was there, and Mr. Wonderful was supposed to come, but he had something that held him up.
Yeah,
so we had somebody else.
So we didn't get to
talk
see him,
But the general kind of feeling and consensus with the experts is that next year the residential sales are going to go up about 14% in number. So lots more houses are going to start selling. People are going to be, sometimes people just have to move or want to move, and so it doesn't matter what interest rates are and affordability.
And they've kind of been locked in for so long in a holding pattern, waiting to see waiting for this expectation that there was going to be this real significant reduction in rates. That's not going to happen.
Right.
It's not going to happen.
It's totally not.
It is what it is, rate-wise. And there's a lot of people who have needed to move, who are finally going to go ahead and do it in the spring.
Bite the bullet. They're finally listening to move now, refinance later if rates go better.
Yes.
And they talk too about rates. They're probably going to hover right around 6, give or take a little bit, for the whole year. So that's kind of where they are.
Slight ups and downs in the low to mid 6s, but that's really the prediction for the whole year.
Yeah. There's a meeting with the Fed the 9th and 10th of this month, and they're saying they're going to come down 0.25 or 25 basis points. But we've talked about that before, how the mortgage rates kind of adjust ahead of that, take that into account.
And we could have we could have a whole discussion about just because the Fed rate goes down does not mean the mortgage rate is going to go down. Mortgage rates are really more tied to the 10-year bond, and that does not follow in lockstep with the Fed. So you just always have to keep in your mind, Fed rate does not equal mortgage rate.
Exactly. It takes in job markets, and job markets are getting soft right now, and inflation, that's another thing. And that was something else they talked about yesterday too. 2% inflation doesn't mean that it's only 2% inflation. It means this is 2% on top of the inflation that was before. So it's like still everything is really high, as you guys know, I'm sure. You can't go to the grocery store for less than $200 and get like nothing anyway. But inventory is still improving. There's plenty of listings out there for buyers to choose from. Sellers still have a lot of equity, so there's not a whole ton of foreclosures going on. It's not become any epidemic or anything.
No.
There are a few, but not too many. Investors are kind of coming back out again. It's really kind of leaning towards a balanced market. There's about 4 months of inventory, and 1, 2, or 3 months of inventory is really a seller's market. 4, 5, 6 is pretty balanced, and then anything over 6 is a buyer's market. So we're at the seller's market end of a balanced market, but that still means, we're not going to get a ton of competition for your listing. If you get an offer, don't wait for 10 more to come, because it's probably not going to. Usually the first offer that you get is going to be your best one anyway, so try and negotiate for the terms that'll make it a win-win for you. And so it's a little more negotiable for buyers. We're going to have to get a little more realistic on prices. And
realism from sellers on prices, but also just a calmer market than we saw with those super low interest rates, which, let's say it again, were tied to a global pandemic, so are not coming back. People remember those rates, but they don't remember, or what they're choosing not to remember, is the multiple offers for buyers and having to pay over asking price and having to waive inspections. And there was lots of not so great that came along with those interest rates. And so there was a freneticness to that market and a hurry, and we're out of that.
Out in that market.
Yes. Yeah. So we're kind of back to normal, and normal is good.
Yes. Yeah. Remember the 2 and 3% was done in response to the pandemic and the financial, oh my God, stuff that was going on during the pandemic. Because remember, a lot of people couldn't go to work, and there was a lot of other things going on. So that was a government effort to help the economy out at that time. So we're not going to see that again, I would think, unless stuff hits the fan again in a really bad way, but hopefully we've learned from
that. Was really unprecedented. Nobody knew what to do, and that was the reaction. Was those super low rates, and we're still dealing with the aftermath. Those were not a net positive.
Right.
So they really weren't.
So I think something important to kind of cover is for you to optimize the best rate that you can get in this climate. You're going to need to work with Melinda or a good lender, getting your credit the best that it can be, and tell them all the things they need to do to get the very best rate that they can in this market.
Yes, and you're going to be able to get seller concessions in this market, potentially for a buy down that you weren't able to get before. And we do want to make sure your credit is in the best place, so that you're going in knowing where you need to be price-wise, and hopefully we're getting some seller concession to buy the rate down a little bit, or you're buying the rate down.
Right, but your good credit, your really good debt to earnings ratios, make sure you're beyond reproach, right?
It's easy to want to go look at the houses first. It's important to go get pre-approved first before you start looking at houses, because we don't want you in a situation where you find the perfect house and you're not ready to buy. You need to be ready to buy before you start looking at houses. If you can't get
proof that amount, it's heartbreaking. And then nothing that's in your range is near as good. So it's really sad. Another thing too, and a lot of my military people do this, they'll get approved for an amount, but they don't shop at that amount. They shop well below it. So being house poor is a real thing you don't want to get into. And insurance and taxes go up every year, so. And with the house, there's always something, right? The washer machine goes out, the refrigerator has to be replaced. My dad just had to buy a new refrigerator. Just always something happens, right? If we have a hailstorm, insurance will replace it, but you got to pay the deductible.
You got to pay the deductible.
So there's always something you have to consider. So don't shop necessarily at the top of your range, because life is going to happen, and you don't want to get stuck with your pants down.
And for most people, we're going to pre-approve you for a dollar amount for the house, but the more important conversation needs to be about the monthly payment. Because what we pre-approve you for the house may not be at all what you're comfortable with for monthly payment. Sometimes that house number is higher than what you want to budget. If you're good with your money and you're budgeting and you're conservative, you're going to be under your pre-approval amount probably.
And you'll still be able to go out to eat or go to the grocery store in today's day and age.
Exactly.
But balanced market's a good thing, and there's negotiability both ways, and it's not a terrible thing, and there'll be more listings to pick from and less competition on each one. So hopefully it'll work out to be a good thing for everybody, and it won't be so reactive. If the rate does come down a little bit, we won't have that huge rush of people. It'll be a little bit more relaxed and shopping for houses and calmer negotiations, right? So that's good. So it feels like the next year is not going to be a boom. It's not going to be a bust. We're not going to the bottom's not going to fall out of anything. It's going to be better. It's just balanced and the way real estate really should feel.
That is a great point. That is how it should be. We have lived through a few years of not normal.
Right.
Yeah, very not normal. So now we're getting back to a more relaxed pace and ability to think about your decisions and not having to just throw crazy offers out there hoping you get it. So all in all, this is a good thing. This is getting back to a balanced market. Rates aren't expected to do anything crazy up or down. We are where we are. It gives you time to get ready, to see what you qualify for, to make sure that's going to work for your monthly budget, and make a good decision without being rushed.
Yeah. I've had several conversations lately with people who are of the age where they were buying houses when the rates were 11, 14, 18%.
Yeah.
So, this still is not that bad of an interest rate.
Yeah.
It just feels like it's high because prices are up a lot higher than they were back then. So we just have to adjust to the new normal.
Yep.
That's the way things are nowadays. So, I think that's about.
I think that's about it. Yeah. You still need to move. You still need to make your life decisions. Either your family's growing, or you're downsizing, or you get a job transfer. You can't put your life on hold.
Right. And if you're a first-time buyer, get all your ducks in a row first. Make sure your credit's clean, your debt to earnings is good, and get pre-approved before you get started.
Yep. We sometimes we start that conversation almost a year before you actually do it and actually buy the house.
Yeah, they say buyers start looking online a year before they actually make a move. So when you start poking around in Zillow and Realtor.com, that's when you need to hook up with a lender, to make sure that your credit's all good and you're going to get the best rate you can and get approved for an amount that's appropriate for you and your lifestyle.
Yes, you need to, especially first-time buyers, work with a lender who is going to take the time to have that lengthy one-on-one conversation with you where you get all of your questions answered, and we're talking about your income and your assets and your specific situation, because that first time is scary, and you need that conversation where you are getting your questions answered. You're not just reading something online, or you're not having a quick chat with somebody where you feel like you're getting canned answers and not a real conversation about your situation.
Yeah, you need a lender who's mature and who is mature in the position, who has experience in the field and knows the ins and outs. So not somebody who's brand new, who's not going to be able to give you a good answer. I have this situation going on right now. It's a little bit different. It's not with lenders, but it's with agents that work for builders. So my client chose one builder over another because one salesperson was very into the details and got the answers that they needed and knew, to cover all the details for her. The other one was just kind of talking in vague terms and, everybody spends about $20,000 at the design center and things like that. She wasn't answering my client's questions specifically. So she lost a sale. So lending is the same thing. You want someone to talk about all the details, all the ins and outs, the ways that you don't hurt yourself when you're trying to fix your credit report. You don't want to go through and close a bunch of accounts out. That'll be a bad thing. You don't want to put all the debt onto one credit card either. There's all these nuances and things.
Because it does. That's a great point. It does kind of get into other aspects of your life. Like you may have been thinking about buying a car, and you didn't realize that buying a car could affect you buying a house. So there's other aspects of your life that the potential home buying is going to affect.
Yeah, or even like if you buy a couch on that no money down, no interest, pay it off in a few months, that still goes against your credit. So
it does.
Lots of things. Anyway, for the coming year, expect a more balanced market and pretty consistent rates. A little bit of variation up 6 plus or minus. Prepare ahead and plan well.
Contact us early and be ready.
We are here. Okay guys, we forgot to mention totally that we are at La Bodega on William D. Fitch. La Bodega. They used to be in Northgate, and they were one of my favorite places, and I think Melinda loved them too. They were the ones that had the shaker margaritas and the good quesadillas. Anyway, on William D. Fitch, near RX Pizza, and we came here for lunch today because they have my favorite pulled pork quesadilla. It's so good, and So come by here for lunch or dinner. I really like it, especially if you haven't tried it on Northgate. If you did try it on Northgate and you don't know it's here, come again. It's really good stuff.